Hi there, welcome to Kneppyinvests. In this video, I am going to feature 4 companies that piqued my interest in the past week, or because they released some announcements to the market that were interesting. Even though these are my stocks of the week, it does not mean these are recommendations. The whole point of me doing this video is to share some ideas with you, and hopefully me sharing these ideas with you will give you some inspiration to do further research on any or all of these companies. And hopefully, if you do diligent research or more diligent research, you might decide one or all of these companies either buy or not. So it's all up to you to come to that decision. You should not leave the decision making to someone else except yourself. So again, the whole point of me doing this video is just to share some ideas with you. I don't want you to go out blindly buying any of these companies just because I've talked about them. Now, I've got through all that. The 4 companies I will be featuring in this video are MaxiTRANS, which I've already talked about before as a potential good value company. It does look fairly cheap and still looks fairly cheap, even though the share price has been rising. Lynch Group, which is a recently listed company on the ASX, and they're all about flowers and potted plants. They did release a trading update, an earnings upgrade, and the company does look interesting at this point in time. Avita Medical, I've talked about them also in another video. Share price has taken a bit of hit over the past 18 months or so, but what they do is very interesting and has some major positive implications for society in regards to burn victims and how we treat them. And Probiotec, I'm not sure I've talked about this company before. However, I was a shareholder of this company between 2017 and 19, and again, they've entered my radar as a possible buy in the future. The first company I'm going to touch upon is MaxiTRANS. MaxiTRANS is a supplier of truck and trailer parts. They also do trailer repairs and services in Australia and New Zealand. Fairly good valued company, market cap of 78 million. However, they made $339 million in revenue and were operational cash flow positive of 47 million for the trailing 12 months. And that is helping them repay their debt. So they have brought their debt down a fair bit over the past year or so. They released an announcement on June the 9th in regards to some litigation that was settled. And with this settlement of this litigation, they are going to receive $7.2 million by the 30th of June 2021. So that $7.2 million will help them repay their debt down even further. Right now, based off their half-year results in February, they still have $23.8 million of debt. However, they also have $26.5 million of cash, so they actually are net cash positive, and they did repay about $14 million of debt during the past year. So they've increased their cash on hand quite significantly. In fact, if you look at the half-year results, they increased their cash on hand by $1 million, even though they repaid $40 million of debt. So they are increasing their cash. And if the conditions continue to improve or remain the same, they should have significant amount of cash on hand by the full year. So this company is still looking quite cheap at these levels, but I think the market is starting to catch on to the cheapness or the good value of this company. So let's have a look at the chart and another reason why I'm getting excited about this company. This chart of MaxiTRANS goes back to pre-COVID-19 financial panic, and during the heights or the lows of that financial panic, the share price of MaxiTRANS went to a low of 10 cents on the 23rd of March 2020. I'd say a lot of companies did see their low at that point in time on the exact same day because that was the low of the overall market. Share price of MaxiTRANS did rally a little bit in subsequent few weeks, but really share price went sideways until we saw a shift in sentiment around early August. Before that, we did see the 50-day moving average above the other 2 moving averages, the 10 and 20-day, but around that time we saw the reverse. the 50-day moving averages went below the other two moving averages, and we just saw the share price rally for MaxiTRANS from 15 cents to a high of 36 cents towards the later period of November. Then we saw a little bit of weakness in the share price, and when they did release their February 19 or half-yearly results on February 19, revenue of 185 million, operational cash flow of 21.6 million, and net cash of 2.7 million. The market did initially respond quite positively. I do remember that report and thought maybe this is the breakout in the share price. However, it wasn't, but we have seen the share price go a bit, we'll say it has trended higher over the past 2 or 3 months. And then when they released this ERP litigation settlement on June 9th, we did see the share price rally from 37.5 cents to a current share price of 42. So the chart does look quite bullish at this point in time. There is positive sentiment in regards to this company. And also, you could also say this company is looking like very good value based off its financials. I am very interested in taking a position in this company and just putting it into my sentiment and momentum portfolio. I do think this has potential to run quite a bit further over the next few years, particularly if those financials keep on improving. Next company I want to talk about is Probiotec. This company manufactures, packs and distributes prescription and over-the-counter pharmaceuticals, medicines, FMCGs, and consumer health products. They manufacture products on behalf of the clients. So what they manufacture, they actually don't own themselves. Market cap of Probiotec is 108 million, revenue of 106 million in the last 12 months, and operating cash flow of nearly 10 million. So the market cap is 18 times operating cash flow. Typically, I like to see that number between about 10 and 15. Anything lower than about 6 would be fairly good value. Anything higher than about 20 would be overvalued. So they're heading towards the overvalued realm. So they really need to grow for the future to justify their valuation. On June 9th, they did release financial year 21 guidance and trading update. So it's a really nice little table they gave us here with the financial year numbers, financial 21 guidance range, and then a pro forma financial year 21 guidance range. So what does pro forma mean? Well, they did do an acquisition of a company called Multipack that was announced in, I think it was November of 2020 and completed in January 21. The pro forma just means if they assumed they had that acquisition for the whole 12 months. That's what their numbers would look like if they had that company for the whole 12 months. And the guidance range without the pro forma is just the amount of time where they've had that acquisition. So look, pretty good growth over the past 12 months. However, if you look at the underlying earnings per share without that pro forma, it actually did go backwards. But the market did like this announcement, and we'll be able to see the reaction from the announcement when we look at the charts in the next slide. I was a shareholder of Probiotec for a 2-year period between 2017 and 19, so before the time period of this chart. This chart goes back to, again, just prior to the COVID-19 financial panic. And around just before then, the share price of Probiotec was in a bull run. In fact, it went from a share price of $1.90 to a high of about $2.50 in a short period of time. And then the share price collapsed and fell to a low of $1.60 towards that March 23rd date. Ever since then, the share price really hasn't been into any sort of uptrends. You might argue when they announced the acquisition of Multipack on November 10, when the share price did increase 16%, we did see a bit of a short-term rally with the share price. But as soon as the share price went to that previous high of $2.50, it fell back again. Wasn't sure why we did see that short-term downtrend in the share price from early 2021 to just before they released this June 9 financial 21 guidance and trading update, because the share price fell from $2.50 to $1.95. You can see the reaction of the market in regards to this guidance and trading update. In fact, the share price has rallied up 23% in 3 trading days and has or is moving towards those 2 previous highs of about $2.50, and that is a resistance level. If the share price of Probiotec can get above that $2.50 on good volume, that would be a fairly bullish move. However, the share price has run up quite a bit in the last 3 trading days. Would not be surprised to see some profit taking. I would also not be surprised to see some of those buyers who bought in January at above $2.35 see the opportunity to sell out of this dog stock, because of course, anytime you see the share price fall when you take a position, you automatically think that company is a dog stock, no matter what's happening with the share price currently. So I'll be interested to see what happens if the share price moves towards that resistance level. If it can go above and reach all-time highs, that would be a fairly bullish move and a possible entry position to take with this company. Now on to Lynch Group. This is a company I didn't know much about before they released their trading update on June the 10th. The main reason behind that is their recent IPO. In fact, they listed on the ASX on the 6th of April 2021. This company is a vertically integrated wholesaler and grower of flowers and potted plants with positions in Australia and China. So they do have an Australia division and a China division. The China division does concern me a little bit just because of the unpredictable nature of the Chinese government. You just don't know how they would want to affect an Australian company that is doing well. Market cap 454 million. The revenue and operating cash flow is based off the numbers I found in their prospectus they did release. So revenue of 230 million in financial year 20 and operating cash flow of 36.7 million. So this company does look interesting, particularly because what they do is fairly unique. I don't see many companies listed on the ASX or many other exchanges that deal with flowers and potted plants. The trading update that did release on June the 10th was a profit upgrade. They do use pro forma NPATA, so net profit after tax and amortization. Costa Group is another one that uses that, I believe, and maybe Select Harvest. Anyway, they've increased that, so it is earning grades from their prospectus forecast of 28.7 million to a range of 31 to 32 million. The whole reason they've increased their forecast is not in regards to the Australian division, that's going to plan. It's all because of their China division. It is stronger than, or it's performing stronger than expected. Because of domestic pricing allowing it to increase production above forecasted rates to meet the demand. So it's all about demand. Interesting company. I'm not sure I'm willing to take a position in this Lynch Group just yet, but the chart does look interesting, and we'll have a look at the chart right now. Since Lynch Group only recently listed on the ASX, we don't have a lot of data to look at here. I do prefer at least 3 months of share prices. So we've only got 2 months here, just over 2 months. However, you can start to see potentially new trend developing when share price is at an all-time high for Lynch Group, albeit a 2-month high. Just be aware, if you do use TradingView, so this is taken from TradingView, there was another company with the exact same code as Lynch Group listed on the ASX back before 2011, and when you look at the TradingView chart for Lynch Group, you actually have that other company, their chart and share price action included with the Lynch Group chart. That company back then, I forget what it was named, but they were bought out by Newcrest Gold Mine Company. And since 2011 and 2021, there's been no company listed on the ASX with the code LGL. For some reason, TradingView hasn't deleted that old company from the data set. Anyway, a couple of reasons I am interested in Lynch Group. The first reason is we did see Wilson Asset Management come out with an announcement that they do have a substantial holding in Lynch Group, so that's above 5% holding. They released that information on the 25th of May, I believe, and potentially that's why the share price did run up in late May from about $3.20 to a high of $3.80. We did see a bit of a consolidation period after that high of $3.80. And when the company released this trading update on the 10th of June, the share price increased 5% and moved towards that high. It actually initially did go above that high, and then there was a bit of selling. I do think this is a potentially bullish looking chart. If we do see the share price rally in the next few days and get above $3.80, that would be a bullish move. I am interested in this company for those 2 reasons. Wilson's Asset Management taking a position, and also the chart, even though we only have 2 months of data, does look fairly bullish at these prices. Also, it's an earnings upgrade, and I love earnings upgrades. Next company I want to talk about, the final company, is Avita Medical. I've already done a video on this company. I am high on the potential of this company. But just because I'm high on the potential of the company doesn't mean the company will succeed, and doesn't even mean I will take a position in the company. There's a couple of reasons why I haven't taken a position, not only because the share price has been under pressure over the last 15 to 18 months. If we look at the market cap, 604 million. So the market is excited about the potential of this company just like I am. So that's one thing that is holding me back, is just the valuation around the company. The other thing that's holding me back, not the revenue, $31 million in the trailing 12 months, it's the operational cash flow burn. So they burned through $38 million in operations in the last 12 months. That's also the other thing that's holding me back. So it's the valuation and the cash burn rate in their operations. Two things that's really holding me back, apart from the share price action over the past 15 or 18 months. In saying all that, on the June 11th, they did announce that the FDA has expanded the use of their RECELL system, and that's quite important because the two now expanded use of the treatments is in regards to burn victims between 1 month and 18 years. Before this announcement, their treatment was only applicable to those burn victims who were over the age of 18 years. This is quite important because 25% of burn victims are under the age of 16 years. Not sure why that age group was excluded, but now it is included. And the other one was full thickness thermal burns that extend beyond 50% of the total body surface area. The market did react quite positively to this announcement. So now let's have a look at the chart and the market reaction to this announcement. I'm going to show you two charts, a bit of a longer term chart, and then I'm just going to zoom in to the last few months just to see, or have a closest focus on how the market has responded to this announcement. The reason I want to show you the longer term chart is just to show you how much pressure the share price of Avita Medical has been since just prior to the COVID-19 financial panic. The share price did get to a high of around $17 in February of 2020, and then with the COVID-19 financial panic, the share price fell from $17 to a low of about $6 or $6.50. So a lot of companies, I showed you or mentioned that MaxiTRANS share price, that was low, and that was a good time to buy. For Avita Medical, that was a low at that point in time, but we have seen the share price actually fall below that COVID-19 financial panic low. In fact, the share price has been under pressure ever since then and keeps on dropping. Current share price, or just before they released this announcement, was $4.50. I was a little bit excited around January, February, because it looked like the share price might be taking off, the sentiment might be turning, but that was a failed shift in sentiment. Sometimes when you do see a possible shift in sentiment, it can fail, and it definitely was a failure. And then maybe it was because they released their half-year results in February and the market didn't like it. We did see a big down day. However, I'll just show you the next chart and we'll see how the market has really reacted to this announcement. And there are some potential positive aspects to the market reaction. When I zoom into the Avita share price over the past 6 months, I thought originally it was going to be 2 or 3 months, there was a bit of a rally in the share price towards the end of 2020 and January of this year. That's when I did get excited about a potential shift in sentiment. However, the release of their financial results in February, we did see the share price fall quite considerably on that day. If I did take a position just before that, that would have been an automatic sell. We have seen the share price fall into a well-defined downtrend since then. In fact, the share price has fallen from $6.20 to a share price of $4.50 just before they released this expanded FDA approval announcement on June 11. When they released this announcement on June 11, the share price did increase 10%. At one point, it actually increased by about 15%. There was a little bit of selling that came in during the day. However, the share price did settle on close right on the 50-day moving average. That is important. That's a natural resistance level for the company's share price. If we do see the share price rally above that and maintain a value above that 50-day moving average, that could be a signal that the sentiment in this company has shifted. I don't have confirmation just yet, so even though I am waiting for a shift in sentiment in this company, I'd still want a bit of confirmation before I take a position in this company. And that is all I've got for Kneppy's ASX stocks of the week. Again, these are not recommendations for you to go out and blindly buy any of these companies. I want you to do your own research and come to your own conclusions whether these companies are a buy or potentially even a sell. If you do have any questions or any comments about these ASX stocks of the week, I'll gladly answer anything you have to say or ask as soon as possible. I am being a little bit tardy with answering and any comments I do have, but eventually I'll get to them. The last thing I should say is I'm not a financial advisor, so if you do need financial advice, make sure you seek out someone who is qualified and can speak to your own financial needs. That's all for this video. Have a good day. Talk to you later. Bye.